All right, so we're back, and today we're going to get right into it using our smart money concept skills. And we're going to take a look at the USD pair and try to forecast what we think might happen during tomorrow's London session, which is Wednesday, March 26, 2025. And just to let you know, we're going to assume that you're already familiar with SMC terminology, so we're going to kind of skip over all that and just get right into the meat of the forecast itself.
Yeah, that's right. We're going to take a look at some of the recent technical analysis. We're going to look at some trading ideas that are floating around out there, and also take into account the economic calendar to kind of synthesize all that information and give you a nice, clear, concise SMC forecast for the year USD pair.
Sounds good to me. So I guess to start with, what kind of story is the USD telling us right now in terms of recent price action? Are we see a lot of momentum in one direction or the other?
Well, it's kind of interesting. Right now, it's actually a bit of a mixed bag. In the last 24 hours, we saw a very slight dip, about 0.02%. But when you zoom out a little bit and look at the 5-day chart, we're actually seeing a more significant decline, about 1.04%. But the interesting thing is that over the last month, we've actually seen the EURUSD gain about 3.04%. So, we're seeing these kind of competing trends here in the different time frames. And it kind of suggests that we could be at a point where maybe the dominant trend is starting to get tested.
Okay, so it sounds like we've got some longer-term bullishness, but it might be running into a little bit of resistance here in the short term. So
Yeah.
what are the technical indicators telling us, or are they giving us a little bit more clarity on what we might expect?
Well, as of early this morning, around 1.41 a.m. GMT, the technical indicators are actually giving us a pretty strong signal, a strong sell signal for EURUSD. And this isn't just based on one indicator. It's kind of a consensus across various technical tools and moving averages. So, yeah, it definitely paints a little bit of a bearish picture for the short term.
Strong sell. That sounds pretty serious, but, the market doesn't always follow what the algorithms say. What are some of the analysts out there thinking? What kind of trading ideas are they floating? Are they all agreeing with this bearish sentiment?
Well, that's what's really interesting is that the trading ideas out there are kind of mirroring the mixed signals that we're seeing in the price action itself. You've got some analysts that are saying, hey, we think this is just a continuation pattern. We think it's going to continue to go down. Maybe we'll see a break of a key trend line for confirmation. But then on the other hand, you've got analysts saying, hey, look at these demand zones down here. We think buyers are going to step in here and we might actually see a reversal to the upside. And, this kind of difference in opinion is actually pretty telling. It kind of suggests that we might be at this important inflection point where whichever way the market breaks next is probably going to define the short-term trend.
Yeah. Interesting inflection point. Yeah, that makes sense. So, let's kind of zero in on some of the recent price action. What are some of the things that analysts are focusing on? What levels are they watching?
Well, if you take a look at yesterday's analysis from March 25th, they noted that we had 5 days in a row of decline, and the year USD even dipped below that 1.0800 level, which is, a pretty psychologically important level. But what's really interesting is that they also noted that the selling pressure seemed to ease a bit during that move down. So, that kind of raises a question. Is that a sign that the selling momentum is kind of drying up, maybe setting the stage for a reversal? Or is it just a pause before it continues lower?
Interesting. Yeah, easing selling pressure below a key level. Yeah, that's something we need to keep an eye on. So what are some of the other specific support and resistance levels that we should be watching here?
Sure. So on the resistance side, we've got some levels at 1.0954, 1.0969, and then that big psychological level at 1.1000. That's where we might see some sellers come in on the support side. We've got 1.0728. That's a key support level that we're watching.
Gotcha. And, we saw price kind of bouncing around that 1.079 level earlier today. A little bit of a dip intraday. So it seems like we're definitely kind of respecting that lower range a little bit more than those higher resistance levels, right?
Exactly. You're right. That recent price action around 1.079 and then the dip today kind of reinforces that idea that we're in this lower range now. We're kind of respecting the lower support more than the higher resistance. And then if you go back and look at the analysis from March 23rd, they were saying that as long as Euro USD stayed below 1.0856, the bearish momentum was likely to continue. So that was kind of a confirmation level for the bears.
Okay, so 1.0856, kind of the line in the sand for the bears, at least according to that analysis. Now, I know that we also had some analysis from mid-March that was pointing to a potential bullish move on the H1 chart, the hourly chart. So what was behind that more optimistic outlook?
Yeah, and that's a good point. We got to look at different time frames. And back in mid-March, the analysis was saying that the Euro USD was trading above the 200 period moving average on the hourly chart. And, the 200 MA is a really important indicator. A lot of people watch it. It kind of gives you an idea of the longer term trend on that shorter time frame. And so they were saying back then that resistance was around 1.0950 and support was in the 1.0805 to 1.082 EUR area. But, what's happened since then is that we've broken below those support levels, and that suggests that the shorter term bias might be shifting.
Right, so that longer-term bullish potential on the H1 might be kind of out the window now with this more recent price action. So given all of that, what do you think about the current market structure on the H1 time frame? Would you say it's bearish?
Yeah, I think it's pretty safe to say that the H1 timeframe is looking bearish right now.
Hmm.
We broke those support levels from mid-March. We've got that strong sell signal from the technical indicators. We've got all these analysts talking about bearish pressure below 1.080000. So yeah, I think bearish is the way to go.
Okay, bearish H1 structure. So in terms of SMC, what would you say are the key swing high and swing lows that we should be paying attention to?
Well, based on everything we've talked about, I would say the key swing high is probably around that 1.0840 level, and the swing low is down around 1.0775. So those are kind of our anchor points for finding high probability setups using smart money concepts.
All right, so bearish H1, 1.0840 for the swing high, 1.0775 for the swing low. Now let's talk about bearish order blocks. What are we looking for here when we're thinking about SMC?
So when we talk about bearish order blocks in SMC, we're basically looking for the last significant bullish candle, or sometimes it's a group of candles that happens right before a big move down that breaks a key swing low. So it's basically the area where the institutions started to really pile in on the selling side, and that's what pushed the price down.
Gotcha. So where are we seeing potential bearish order blocks forming in the recent price action based on those swing levels?
Well, earlier in March, we saw some talk about a bearish rectangle pattern. It had resistance around 1.0861, and if the support for that pattern at 1.0814 broke, then that top of the rectangle could act as a bearish order block. And then we also had some broader resistance zones mentioned in the 1.0860 to 1.08990 range. Those could be areas where sellers might step in. But, if we really want to focus on the price action that happened right around the break of our swing low at 1.0775, then the most important bearish order block on the H1 is probably in the 1.0835 to 1.0845 range. So that was the last little push up by the buyers before the sellers really took over and pushed the price down below that swing low.
Okay, so we've got that 1.0835 to 1.0845 zone as a potential area of supply. Let's talk about fair value gaps, or FVGs. How do these play into our SMC analysis, and what are we looking for when we're thinking about bearish continuation?
All right, so fair value gaps, those are basically areas on the chart where the price moved really quickly in one direction and there wasn't a lot of trading in between. So you end up with these gaps where there's an imbalance between buyers and sellers. And the classic bearish FEG is a three-candle formation where the low of the first candle is higher than the high of the third candle. And these gaps are kind of like inefficiencies in the market. And a lot of times the market will try to go back and fill those gaps kind of like it's trying to restore balance.
Okay, so the market likes to fill those gaps, bring things back into equilibrium. What kind of FEGs have we seen mentioned in the recent analysis for EURUSD?
Well, they've been talking about some FVGs on the H1 timeframe and even some on higher timeframes. One specific one that was mentioned was an H4 FVG in the 1.0806 to 1.0820 euro area. And even though that's on a higher timeframe, it could still have some influence on price. And then they also mentioned that there was an H1 FVG that had recently been mitigated, which means that price had traded back into that gap and kind of filled it up.
So if it's mitigated, it's not as important anymore, right?
Right, exactly.
So the ones that we really want to pay attention to are the unmitigated FEGs, the ones that haven't been filled yet. And ideally, the price shouldn't close beyond that FEG in the opposite direction. If it does, that kind of suggests that the imbalance has been resolved.
Okay, so we're looking for fresh, unfilled FEGs that are pointing in the bearish direction. Are there any that stand out to you right now on the H1?
Yeah, if you look at the recent price action on the H1, you can see an unmitigated bearish FEG between 1.0820 and 1.0825. And this gap was created by a really strong move down. So it definitely tells us that there was a lot of selling pressure there. And because it hasn't been filled yet, it could act as resistance if the price tries to move back up during the London session, or it could be a target if the price continues to move down.
Interesting. Okay, so we've got that potential supply zone up in the order block and then another potential resistance area down in that unmitigated FEG. So let's talk about liquidity now. Where do we think the big pools of buy and sell orders are sitting based on this technical picture? Okay, so with smart money concepts, we know that you tend to find a lot of liquidity above recent swing highs. That's where you've got all the stop loss orders from the sellers and the buy stop entries, people trying to get in on a breakout to the upside. So that's what we call buy side liquidity. And then on the other side, you've got sell side liquidity below the swing lows. That's where you've got the stop loss orders from the buyers and the sell stop entries. And then you also have a liquidity around key support and resistance levels, because a lot of traders like to place their orders around those levels, and the market will sometimes make these moves where it goes and kind of grabs all that liquidity and then reverses direction.
Yeah, liquidity is like the fuel for the market.
Yeah.
So where do we think the buy side and sell side liquidity is sitting right now based on our bearish H1 structure, that high at 1.0840 and that low at 1.0775?
Right. So based on those levels, I would say we've probably got some buy-side liquidity above that 1.0840 swing high, maybe starting around 1.0845, and then extending up to those resistance areas we talked about earlier, maybe as high as 1.0860 to 1.090. And then on the sell side, we're probably going to see some liquidity below that 1.0775 swing low, maybe around 1.0770, and then further down around that support level at 1.0728. And then also don't forget about 1.070. That's a big psychological level. So we often see a lot of orders clustered around those round numbers. So given our bearish bias, it's very possible that the market is going to try to go down and grab that sell side liquidity during the London session.
Okay, that definitely fits with the bearish scenario that we've been building here. Now let's switch gears for a second and talk about the fundamentals, what's going on the economic calendar that could have an impact on EURUSD during the London session tomorrow.
Well, the good news is that there's not a whole lot going on tomorrow during the London session, at least not in terms of high-impact news releases. So if we define the London session as 8 a.m. to 5 p.m. UTC, there's really nothing on the calendar that's likely to cause any major moves in your USD. There are a couple of things happening outside of those hours, like the Australian CPI and the Japanese coincident index, but those aren't really going to have a direct impact on EURUSD during the London session.
Okay, so it sounds like things are pretty quiet on the fundamental front, at least during the specific hours that we're focused on. Does that mean that the technicals are going to be even more important for this session?
Yeah, it definitely could. When you don't have any major economic news coming out, the technicals tend to have a bigger influence on price action. But we always have to remember that the overall market sentiment can still play a role. Maybe there are some big news stories happening globally, or maybe traders are already starting to position themselves for news releases that are coming out later in the day. So we can't completely ignore the fundamentals.
Right, the fundamentals are always lurking in the background. So let's bring it all together. Then we've got this bearish technical setup. We've got a pretty quiet fundamental picture, at least during the London session. What's your overall directional bias for USD as we head into tomorrow?
Okay, so when you put it all together, the bearish H1 market structure, that bearish order block in the 1.0835 to 1.0845 area, that unmitigated bearish FEG between 1.0820 and 1.0825, the sell side liquidity sitting below the swing low, and the lack of any major news during the London session, I think it's pretty clear that the bias is to the downside. So I'm thinking bearish for USD during the London session. My guess is that we'll see the market try to move down, maybe starting from that bearish order block and then heading down to grab that sell side liquidity.
Or bearish bias for USD based on SMC. So let's translate all of this into a potential trading setup for our listeners who want to try to capitalize on this move. Let's assume we're going with a bearish continuation strategy for the London session.
Okay, so if we're thinking bearish continuation, then one way to play this would be to look for a short entry within that bearish order block that we identified. So that would be in the 1.0835 to 1.0845 area. Now, if you want to be a little bit more conservative, you could wait for a rejection from the top of that unmitigated bearish FVG. That would be around 1.0825, and then you could enter your short out of there. But either way, I would definitely recommend looking for some confirmation signals on a lower time frame, like the M15 chart. Maybe you see a bearish engulfing pattern, or maybe you just see a change in character in the price action that tells you the sellers are starting to take control.
Okay, so short entry in the order block, or maybe a little bit lower at the FEG. And then what about our stop loss and take profit levels?
All right, so for our stop loss, we want to put it somewhere above that bearish order block just in case the market decides to move against us. So maybe somewhere between 1.0850 and 1.0855. That should give us a little bit of a buffer. And then for take profit levels, well, the first target would be that recent swing low around 1.0775. That's where we think some of that initial sell side liquidity is sitting. And then if that breaks, we could target that support level at 1.0728. And then if we're really feeling ambitious, we could even target 1.07 over that big psychological level.
Wow, so 3 potential profit targets there. That sounds Pretty good, but I think it's important to remind everyone about risk management.
Oh, absolutely. You never want to risk more than you could afford to lose. So I would say stick to risking 1 to 2% of your trading capital on any single trade. And remember, this is just one possible scenario based on our analysis and our assumptions about the market structure. Things can change very quickly. So always do your own due diligence. Look for confirmation from multiple sources before you enter any trades. And once you're in a trade, make sure you're managing your risk properly. Maybe you move your stop loss to break even, or you trail it behind the price as the trade moves in your favor. There are lots of different ways to manage your risk, but the important thing is that you have a plan and you stick to it.
Great advice. So just to recap, we're looking at a potential bearish move for EURUSD during the London session tomorrow. The key levels to watch are that bearish order block around 1.0835 to 1.0845, and that unmitigated bearish FVG between 1.0820 and 1.0825. And we're targeting the sell side liquidity below that recent swing low.
Yeah, that's a good summary. But remember, this is just our analysis based on what we know right now. The market can always surprise us. So stay flexible and be prepared to adjust your plans as needed.
Couldn't have said it better myself. So here's something for everyone to think about. We talked about all these bearish technical signals, and we've said that the economic calendar is pretty quiet during the London session, but what if something totally unexpected happens? What if there's a big news event that nobody saw coming, something that could completely derail this bearish outlook? How would that change things? It's just a reminder that SMC is a great tool, but the market always has the final say. So stay vigilant and keep learning.
That's all for today. Thanks for joining us.
Thanks, everyone.